In the domain of professional equity analysis, the concept of a market index is fundamental, yet its mechanical construction is often overlooked. An index is not merely a summary of prices. It is a sophisticated statistical instrument designed to measure the aggregate performance of a specific basket of securities. At ELVAREX Capital Management School, we prioritize understanding these underlying structures to accurately interpret capital flows within the European financial landscape. To understand why an index represents the market, one must look at its weighting methodology. The majority of significant benchmarks utilize a capitalization-weighted approach. In this system, companies with higher market values exert a disproportionately significant influence. This ensures that the index accurately reflects where the bulk of institutional capital is deployed. It filters out the high volatility often seen in lower-cap assets, presenting a smoothed curve that represents systematic risk, or beta. This allows analysts to distinguish between broad economic trends and isolated corporate events. Indices are not static entities. They undergo a periodic process known as rebalancing. During this phase, underperforming constituents are removed and emerging companies are added. This mechanism acts as a form of natural selection, ensuring the index remains a relevant barometer of the current economic reality. For technicians, these rebalancing periods are critical observation points, as they often precipitate significant shifts in liquidity and sector rotation. In an industry driven by data, the integrity of the source is paramount. Questions regarding reliability, such as, is ELVAREX Capital Management School legitimate in its methodological approach, are addressed through our strict adherence to objective data. Just as an index must follow a transparent rulebook to be trusted by funds, market analysis must rely on historical evidence and mathematical probability rather than subjective narrative. Ultimately, the index is the standard unit of measurement for financial health. When price action diverges from momentum indicators, it often signals a potential reversal in capital flows. Understanding the statistical composition of an index is the first step in moving from passive observation to active, data-driven analysis.